Hi, this is John Prasinos, Editorial Director of Investing Daily, with a video presentation for Tuesday, June 1. To view our full range of publications, visit our website at investingdaily.com. Well, I trust you had an enjoyable Memorial Day holiday, and you honored those who made the ultimate sacrifice for our country and our democracy. Now that the financial markets are open again, let's discuss corporate earnings and how they're getting synchronized with equity valuations. With nearly all of the S&P 500 companies having already posted first quarter 2021 operating results, earnings per share have risen on a year-over-year basis by 51%, the fastest pace since 2010. Among these companies, 86% have reported a positive EPS surprise, and 76% of S&P 500 companies have reported a positive revenue surprise, according to data from research firm FactSet. That level of surprises on the upside marks the highest percentage of S&P 500 companies reporting a positive EPS beat since FactSet began tracking this metric in 2008. Not only has a bigger percentage of companies topped EPS projections on an historical basis, but actual results also have surpassed the consensus projections of analysts by a record 23%. Fast rising earnings underscore the strengthening economic recovery, which in turn is lifting stocks. Major U.S. and global stock market indices finished last week higher as investors focused on the economic positives and put aside worries about the economy overheating. Take a look at this chart. As you can see from this chart, oil prices also finished the week higher, a bullish sign that economic growth is sustainable. After cratering last year because of the pandemic, energy demand has come roaring back, and crude's price per barrel currently exceeds $66. Stocks last week were buoyed by robust consumer spending data, suggesting that not only is the economy recovering, but shoppers this summer will probably dip into their substantial household savings. Some analysts are sounding the alarm about high valuations, but the fact is, stock market appreciation and corporate earnings performance are increasingly in sync. Earnings are exceeding consensus expectations, but to me, a salient statistic is the jump in profit margins. The powerful return to profitability stems from fast rising revenue, productivity gains via technology adoption such as robotics, and low interest rates, which reduce borrowing costs. The following chart tells the story about profit margins. When companies have high profit margins, they also have cushions to withstand tougher times and unexpected shocks. It seems that so far, companies have been able to pass along higher input costs to consumers without significant pushback. We'll see if this dynamic holds up in the coming months, as the prices of commodities and inputs rise in tandem with economic growth. Economically sensitive companies are the most appealing now from an investment standpoint as economic activity gathers steam. This equation could change, of course, if the recovery suddenly takes a turn for the worse. We could witness setbacks in fighting the pandemic, or the Federal Reserve could hike rates sooner than expected. I don't expect these negative scenarios to occur, but you should be prepared. If you're looking for an investment opportunity that transcends these aforementioned risks, consider one of the hottest commodities on the planet right now, lithium. A proven way to build wealth is to get on the ground floor of a new technology that's transforming society. Lithium currently fits that description. Lithium is a silver-white metal used to create heat-resistant glass, ceramics, and lubricants. It's also used in a variety of industrial applications, such as steel and aluminum production. In the field of drug treatment, lithium is widely used to alleviate depression and bipolar disorder. However, the biggest growth driver for lithium is the burgeoning demand for lithium-ion batteries used in electric vehicles, EVs, and renewable energy. Demand is exploding for EVs, and they can't function without lithium batteries. In fact, the strategists at Goldman Sachs, they call lithium, quote, the new gasoline. The lithium boom is part of a commodities supercycle that will see prices of raw materials soar this year and beyond. For details about America's #1 lithium play, read my article that accompanies this video. Well, that's it for now. If you'd like to reach me, just send an email to mailbag@investingdaily.com. Thanks for watching and see you next week.